Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York. It is Monday, June the 3rd, 2019, and this is the Daily Report for Gold and Silver. A tremendous move beginning on Friday, picking up on Sunday, of course Monday in Australia, London, and Hong Kong, taking gold substantially higher. We had all of the precious metals with the exception of palladium making solid moves today. And we had gold break out of a defined range and is actually now within striking distance of the yearly high at $1,350. Renewed concerns about the escalating tension between China and the United States in terms of their current trade dispute. The addition to that was the announcement last week that Trump was going to initiate tariffs on Mexico beginning at 5%. And the fact that the Federal Reserve might in fact do rate reductions to the tune of 2 rate reductions this year have all fueled gold prices substantially higher. Of course, we entered a long position at $12.93. We moved our stops up yesterday and then again today. We'll talk about that in detail as we pull up our technical studies. But first, let's take a look at the price board. Traders, gold actually traded to a high today of $1,333. Currently is up $18.80. And August gold is currently printing at $1,329.90. An incredible move over the last couple of days. That's a 1.4% increase. The same with silver, 1.46% in terms of the gains today, 21 cents at $14.78. Platinum trading up almost 3.5% today, trading at $18.21.90. And palladium definitely trading lower today, down by about $7.80 at $13.23.70. But that allowed gold to regain its king of the hill status as the most expensive of the precious metals. All of this was aided by a sharply lower U.S. dollar, down well over 0.5%, currently printing at 97.15. Let's take a look at our technical studies and talk about our current trade. Traders, an absolute brilliant move over the last couple of days in gold. When we take a look at activity of today, which of course includes Sunday when the markets reopened in Australia, Hong Kong, and London, we can see that we had a clear and defined breakout above the former resistance line, and this resistance trend line is simply created off of 2 highs, this high here, as well as the record high this year, up around $1,350. There is a gap in the market, but as you will see, we'll pull up in August. This is the continuous contract, and this gap is simply representing the shift from June to August in terms of what was most active contract month. But we did close just off of the highs today at $13.33. Market is currently trading at $13.29.70. That is an $18.60 move, 1.42%. And we did move our stops up. Let's first talk about our stops. Yesterday, I sent out a special trade alert recommending that we raise our initial stop to around 1302. Then today I made a recommendation to move it to 13.10.13 and to maintain your current long position at $1,293.10. The rationale behind where we moved our stop up was Friday's high and the fact that that corresponds quite eloquently to the 0.23% Fibonacci retracement at 13.11.10. And by moving it to 13.10.13, we are moving it just under this particular price point. This market is fast and furious to the upside. And my concern is that when traders get an inkling to pull profits on this most recent move, I want us to be along with that profit-taking crowd. So we'll continue to raise stops, but I do have a upside target that is currently sitting between 1340 and 1380. And to illustrate that, I want to pull up the August chart. And traders, as you can see, this chart looks a little bit different from the one we just had up in that this is being based on August futures rather than the continuous contract in futures. We have an Elliott wave count in this. We also have Fibonacci retracement and a Fibonacci extension. First, when we take a look at our various levels, the one thing that we'll see is that we have a defined breakout as we did on our continuous contract, but you'll also notice that there's no gap in this because this is the August contract as it moved higher. But we can see the amount of energy that was released when it broke above this particular price point. That really was some of the dynamics that moved this market substantially higher. Obviously, it was fundamentals and that market shift or the perception shift in the trade war between the United States and China is more serious than perceived before. It could be an extended, long time process before it gets resolved. Of course, Trump's announcement last week that he would implement tariffs on Mexico beginning at 5% if they don't curb the illegal immigration problem that is coming in from their border. And the fact of the matter is, these scenarios might take quite some time to play out. Now, here's what we're looking at. On this particular chart, what I have done is I have created a Fibonacci extension. Then what we do is we begin our extension right from this point here at around 73. And when we do that, if we look at the 0.618% extension of wave 3, which is a way to look to forecast a fifth wave, that takes us to around 1372. And that is one of my reasons that I'm looking for this market to go anywhere between 1340 and 1360, as high as maybe 1372, 1380. But whether it will do it as a straight climb up, or we will see a series of waves, meaning we've got something here, the market, let's say, stalls at 1345, comes down a little bit, and then makes its play up, which to me would be a little bit more likely. I think there'll be at least one round of profit taking in there. We'll have to see how that pans out, but I certainly think that this is something we want to look at quite closely. Traders, maintain your current long position at 1293.10. Maintain your current stop at 1310.13. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.